Is now a good time to invest? That is probably the most common question investors have when they're contemplating investing in the stock market. After all, when you invest, you want to see the value of your money grow, and right away. And nobody wants to invest in the stock market to suddenly see the value of their money decline. So trying to figure out when to invest, it can cause a lot of stress and anxiety because there's so much confusion. And it doesn't matter how well or how poor the stock market's doing. If the stock market's doing very well and we're hitting all-time highs, you may hear things like, wait, it's overvalued, wait for a pullback. And if the stock market is in a decline, whether a bear market or correction, it could be really scary to go in. And you may hear, no, now is not the time to invest. But the reality is the stock market is inherently unpredictable. Nobody knows what the stock market's going to do. And trying to time the market over the long term is extremely difficult, if not impossible. So what do you as an investor do when you're trying to figure out when to invest? Well, you need to ask yourself one very important question first, and that is, what is the purpose of this money? This money that you want to invest, what's it going to be used for? That needs to be driving when you invest more than trying to time the market. Because what I'm talking about are your financial goals. Your financial goals should drive all investment decisions, including what to invest in and when. And there's two very key considerations you have to take into account, and that is your time horizon and your risk tolerance. Time horizon, that's simply when you need this money. Now, if you need it in the next year or two for your short-term goals, investing in the stock market, not a good idea. Timing doesn't even matter. But your long-term goals, and we're talking about when you need the money for 10 or 20 years, this is where the stock market makes sense. Because over the long term, the stock market has done pretty well for investors that invested for the long term. Let's look at the S&P 500 index. The annualized return from 1928 through last year has been about 10%. However, that's not without a lot of volatility, and that's not without years and periods where the stock market has performed poorly and has declined. But investors that have invested and held on for the long term have done pretty well. And that's why investing in the stock market should be your long-term goals, because you can weather the ups and downs of the stock market. And when you invest doesn't matter so much as making sure your investment is suitable. The other consideration, your risk tolerance. You got to ask yourself this money, what would happen if this money was not there when I needed it? Some goals and some purpose of this money is just too critical to put at risk. For example, maybe this is money you're saving for an emergency. Or maybe it's money you're saving for a down payment for a house, or maybe something really essential like braces for your kids. Even if you're not going to need this money for a while, the risk of it not being there could be too great to even consider putting in the stock market. So the bottom line is, when you're trying to decide when you need to invest, you got to go back and first consider what are your financial goals. That will direct all your investment decisions, including what to invest in and when.